In this video, I'll walk you through step-by-step 3 important IRS forms that come up when you're doing business with U.S. companies. We'll cover the W-9 used by U.S. contractors, the W8Ben used by foreign individuals, and the W8Ben-E used by foreign companies or entities. I'll explain what each form is for, who needs to use it, and how to fill it out correctly. And just a quick reminder, this is general education guidance, not legal or tax advice. Always check with your qualified tax professional if you are unsure. Now let's start with the W-9 form. This form is for U.S. persons, that means U.S. citizens, residents, or U.S. companies. You give this form to the company paying you so that they have your correct taxpayer identification information. You don't send it to the IRS yourself, your client keeps it on file. Line 1, enter your full legal name, exactly as it appears on your tax return. Line 2, if you have a business name or doing business as that's different than your personal name, put it here. Line 3, check the right box for your entity type. For example, individual, LLC, or corporation. Line 4, exemptions. Most people leave this blank. Line 5 is your address, and so is 6. Line 7 is account number. This is optional. Most people don't fill it out. Now, part 1, enter your taxpayer identification number. That's usually your social security number if you're an individual, or an employer identification number if you're a business. Part 2, sign and date the form. And that's it. The W-9 form is simple, but make sure the name and number match exactly for the IRS records. If they don't, the IRS may require your client, who you're getting paid from, to withhold part of your payment. This means that maybe they'll have to treat you as an employee and pay taxes on your behalf. Now let's talk about the W-8Ben. This form is for foreign individuals, not U.S. persons, who receive income from U.S. sources. The purpose is to certify that you are not a U.S. taxpayer. And if your country has a tax treaty with the United States, you might be able to claim a reduced withholding rate. Here's how to fill it out. Part 1, identification of beneficial owner. Line 1, your full legal name. Line 2, your country of citizenship. Line 3, your permanent residence address. This must be outside the U.S. Line 4, if your mailing address is different, put it here. Line 5, your U.S. taxpayer identification number if you have one, and if you don't, use your foreign tax identification number. We'll go deeper on this number in just a moment. For line 6B, you would check this box only if your federal tax identification number is not legally required. This is very rare, so most of the time you'll leave this unchecked. But if you don't have any foreign tax identification number in your home country, that's the only time you would check that box. For line 7, this is an optional number. This reference number is only if your U.S. entity's company that you're working for is requesting this. It would be a reference number for something like a contract number, vendor ID, or particular invoice number. Most of the time, you don't need to put in anything here as it's not required. In line 8, you'll enter your date of birth. And part 2 is the claim of your tax treaty benefits. On line 9, enter your country of residence for the treaty purposes. For example, let's say in part 2 that you are from Canada. On line 9, you would be writing that I certify that the beneficial owner is a resident of Canada. You would write Canada in this space, within the meaning of the tax income treaty between the United States and that country. Then on line 10, for the special rate and conditions, this would read, the beneficial owner is claiming the provisions of article and paragraph 7. So you would write in this space here either VII or 7, the number 7, of the treaty identified on line 9 above to claim a 0% rate of withholding on specific type of income. So here you would put 0%, and in the next line, the specific type of income that you would put here typically is going to be independent personal services. These also could be dividends or other things, but ideally if you're providing contracted services, you would write independent personal services And then you would also write, because the beneficial owner does not have a permanent establishment in the United States. So that's something you could also add as the explanation. You could put that on this line and on this line if you'd like. But for type of income, typically that's going to be independent personal services. And then because the beneficial owner does not live or have a permanent establishment within the United States. Part 3, certification. Sign, date, and print your name. Also, don't forget to check the small little box that says, I certify that I have the capacity to sign for the person identified on line 1 of this form. Now let's talk about the foreign tax number, because this is where many people get confused. The United States IRS requires you provide the foreign tax identification number, and that's the number issued to you by your home country's tax authority. It's the number your government issues to track your taxes in that country. For example, in Canada, your social insurance number or SIN number is what you'd put here. If your country issues tax ID numbers, you should always enter it here. If they don't, the U.S. company may withhold 30% of your payments. The only time you leave it blank is if your country doesn't issue tax IDs, which is rare. If that's the case, you write not legally required. In some cases, you might also need to apply for a U.S. ITIN, especially if you want to claim treaty benefits that require it. So the bottom line is, always provide your tax ID number that you use in your own country for taxes if you have one. W8Ben-E. This is for foreign entities. So let's look at this W8Ben-E. Let's go step by step and walk through the W8Ben-E. This form is used by foreign entities, companies, or organizations outside the United States to certify that their tax status and avoid unnecessary withholding on U.S. payments. Remember, this video is general guidance, not legal or tax advice. Always check with a tax professional if you're unsure. Part 1, identification of beneficial owner. On line 1, enter your company's full legal name. On line 2, enter the country of incorporation or organization. For example, Canada. Line 3, if applicable, enter the name of the disregarded entity receiving the payment. Line 4, select your Chapter 3 status. This is your entity type, such as a corporation, partnership, or trust. Note, if you're a Canadian business corporation, you would normally check corporation here. Line 5, select your Chapter 4 status, FATC status. This is the most important choice on the form. Example, a Canadian consulting company that actively provides services would check active NFFE, non-financial foreign entity. By doing this, you can skip all of the FFI section and go straight to Part 25, the active NFFE, and then finish with Part 30. Line 6, enter your permanent resident address, no PO boxes. Line 7, mailing address if different from your permanent residence address. Part 1, identification of beneficial owner, continued. This is now on page 2. Line 8, the U.S. TIN if you have one. Optional unless required by a treaty. Line 9A, GIIN if applicable. Line 9B, your foreign TIN. This is your home currency's tax ID number. For example, in Canada, this is your business or BN number issued by the CRA. If your country does not issue TINs, check the box for not legally required. This is rare. Line 10, reference numbers. Optional. You can enter here if you have something like a contract number, vendor number requested by the U.S. entity, or leave it blank. Part 2, disregarded entity or branch receiving payment. Complete this only if the payment is being made to a disregarded entity or a branch of your company. Most businesses skip this. Part 3, claim of tax treaty benefits. Fill this out only if you are claiming treaty benefits. Line 14A, enter your country, for example, Canada. Line 14B, Check the box that applies for limitation on benefits. Line 15. Enter the treaty article rate and type of income. Example, a Canadian corporation claims Article 7 of the U.S. tax treaty for business profits. The withholding rate is 0% because the company has no permanent establishment in the U.S. Part 4. Sponsored FFI through Part 28. FATCA classifications. Here's where the form looks intimidating. Parts 4 through 28 are all special FATCA classifications. You only complete one part, and only if it matches the Chapter 4 status you checked in line 5. Since most Canadian operating companies will check active NFFE, you can skip all the way through these to Part 25. But let's quickly go through each part so you know what they mean. If you want to skip this, feel free to fast forward and skip ahead to Part 25. Part 4. Sponsored FFI. This requires a sponsoring entity and GIN number. Part 5. Certified deemed compliant non-registering local bank. For small local banks only. Part 6. Certified deemed compliant FFI with only low value accounts for institutions with no accounts above $50,000. Part 7. Sponsored closely held investment vehicle requires sponsored details and certification. Part 8. Limited life debt investment entity for structured finance entities formed before 2013. Part 9. Certain investment entities that do not maintain accounts. Self-descriptive. Part 10. Owner documented FFI requires reporting through another FFI. Part 11. Restricted distributor for distributors of restricted funds. Part 12. Non-reporting IGA FFI for institutions covered under an intergovernmental agreement. Part 13. Foreign government, government of U.S. possession, or central bank. This is self-explanatory. Part 14. International organization for intergovernmental organizations. Part 15. Exempt retirement plans for pension and retirement funds. Part 16. Entity wholly owned by exempt beneficial owners for government or pension-owned entities. Part 17. Territory financial institutions for U.S. territory-based institutions. Part 18. Exempt non-financial group entity for holding or treasury companies. Part 19. Accepted startup company for startups less than 24 months old. Part 20. Accepted entity in liquidation or bankruptcy for winding down companies. Part 21. 501c organization for U.S. recognized nonprofit organizations. Part 23. Publicly traded NFFE or affiliate for publicly traded companies or affiliates. Part 24. Accepted territory NFFE for entities of U.S. possessions. Part 25. Active NFFE. This is where Canadian consulting or service businesses would complete the form. Check the box to certify you are not a financial institution, you have less than 50% of your income is passive, that less than 50% of your assets are passive. Part 26. Passive NFFE. If more than 50% of your income or assets are passive, check here. You must also complete Part 29 to list U.S. owners. Part 27, accepted inter-affiliate FFI for group FFIs. Part 28, sponsored direct reporting NFFE for NFFEs that report through a sponsor. Part 29, substantial U.S. owner of passive NFFE. If you check passive NFFE, you must list your U.S. owners here with names, addresses, and TINs. Active NFFEs skip this. Part 30, certification. Read carefully. Check the box confirming you have authority to sign. Enter your signature, printed name, title, and date. To recap, all entities must complete Part 1 if you're claiming treaty benefits. Fill out Part 3. The critical step is line 5, your FATCA status. A Canadian operating company will usually check active NFFE, then go straight to Part 25 and finish with the certification in Part 30. That's the complete walkthrough of the W8Ben-E start to finish.